home is probably the most expensive purchase you will ever make, so you should make it carefully. And the mortgage loan for a home will probably be your largest borrowing. You should consider your housing needs and ability to make payments quite carefully. Land and buildings are a kind of property once called royal. What do we call it now? Yes. There are choices you must make about housing: to rent or buy, to live in an apartment or house, in the city or suburb, town or country. Your choice will depend on your career as well as your income and preference. Rising transportation costs make it more important that the location of your housing is close to where you work, bank, shop, and go to church. If you have young children, what might you also consider? Right. And you should calculate carefully the size and number of rooms you need because space costs money. For example, if you have no children, you may need only one bedroom. Besides size and cost, what is important in housing? Yes. How much should you spend on housing? Although some families spend half their take-home pay for it, you should try to avoid exceeding about a third for housing payments or rent. Should you rent or buy? Well, if you don't have money for a down payment, don't have children, and don't think you'll stay long at your present job, what will you probably do? Right. And maybe you're not a handyman, don't like to mow lawns, and are unmarried. Perhaps you prefer townhouses, apartments, or duplexes, or qualify for low-rent housing. To rent, you usually sign a lease contract for a year or more and make a deposit. But a big down payment isn't necessary, and you don't have to sell your old apartment when you move into a new one. What are some other possible advantages of renting? Yes. Because 50 years ago, good citizenship and higher voting rates were associated more with home ownership than renting, the government adopted a policy of promoting ownership. It isn't clear, however, that other circumstances being equal, ownership is actually a cause of good citizenship. Nevertheless, buying a home is subsidized compared to renting because you can deduct property tax and the interest paid on mortgage loans from your income tax. What kind of tax is lowered for homeowners? Yes. Homeownership is probably increasing for other reasons as well. Government programs help some individuals get low-interest mortgages. Creative financing is available, such as graduated payment mortgages with lower payments at first. Also, inflation has kept the value of homes rising rapidly. These all support the wish most people have for a private dream castle of their own. You've heard of the house that sold for $30,000 in 1950, $60,000 in 1970, and $120,000 in 1980? If you owned it, you were fortunate. Again, what's the word for this increase? 72 works for inflation or compound interest. 72 divided by the percentage of interest, or inflation, gives the number of years required for an amount to double. In some periods, in some regions, home prices have increased at 18%, so the price has doubled in 4 years. Fine for owners, but bad for buyers. Occasionally, home inflation slows, so don't count on it heavily. Sometimes homes are hard to sell during recessions or when interest rates are high. What are some other disadvantages to home ownership? Right. The price of freestanding homes with spacious lawns has increased so much that few families with below middle incomes can afford them. But less expensive alternatives do exist, such as mobile homes and other factory-made housing. Buyers can also purchase apartments, either condominiums, which are financed-like houses, or co-op apartments, for which buyers purchase stock and make up the corporation that owns the building. What sort of home is lower in cost, can be moved, provides good short-term housing, but does not increase greatly in value? Yes. You should buy the best home you can afford because more expensive homes increase in value more rapidly. A permanent home bought partly as an investment is usually paid for in large part by a mortgage note. Down payments generally range from 5% to 30% of the home's price, but the larger the down payment, the smaller the mortgage and the mortgage payments. One rule of thumb is that a mortgage payment should be no more than a third of take-home pay or a fourth of gross salary. How large a monthly mortgage payment could someone with a monthly gross salary of $2,000 afford? Yes. Another rule of thumb is that the home's price should be no more than 2.5 times your gross yearly income, assuming you make a 20% down payment. For a $24,000 income, this means a $60,000 home. And if you bought this $60,000 home with a $24,000 income, how much should you pay down? Right. Then the mortgage is for $48,000. If monthly mortgage payments, which usually include insurance and taxes, are 1% of the loan, the payments on a $48,000 mortgage are $480. This payment is about 1/4 of the $2,000 per month gross income, and probably close to a third of take-home pay. But higher property taxes and higher interest rates in the early 1980s have made most payments more than 1% per month. What is the result? Yes. Insurance is about 0.5%, and taxes 1% of a home's value. This means that the lender takes 10% or more of your monthly payment and holds it in escrow until he uses it to pay insurance premiums and taxes. You can choose an older home or a new speculative home, which a builder constructs and offers for sale. You can also have a home custom built, but if it differs greatly from most other new homes, its resale value will be lower. What is the name of a new home built for sale? Yes. A new speculative home is more likely to be saleable later, since it is designed for widely practiced lifestyles. An older home may be a good choice, since it usually has drapes, landscaping, and an established neighborhood. Even new homes need maintenance. Older homes, of course, need more. Be careful not to exceed your budget in improving a new or old house after you move in, and be sure to allow for a reserve for repairing the plumbing or painting. Unless you're quite handy with repairs and the basic construction is exceptional, you may not wish to buy a home more than 20 years old. How could you check the construction? Right. One expert who may be able to help you is a licensed real estate agent, but be sure to separate salesmanship from expertise. This may be hard for you to do. The agent receives a commission of about 6% on a sale, and buyers, directly or indirectly, pay that commission. Most existing real estate sells at or near the listed asking price, but you should offer the asking price only after your survey shows it to be a good value. How close to the asking price do most houses sell for? Yes. For this reason, when you sell a house, you should price it realistically, not at the perhaps inflated levels you've heard about. You can check at the courthouse to find what your neighbor's houses actually sold for. When you sell, you may find the services of a real estate agent even more valuable than when you buy. You may save the agent's commission by selling a house yourself, if you have the time and the knowledge. What do you suppose the agent's commission is? Yes. The house market is best in April, May, June, and July. As a buyer, you may get a lower price in other months. In either case, the availability of mortgage funds may be the key factor. Sometimes it's possible to assume the existing loan of the seller. By assuming an existing loan, a buyer may be able to reduce administrative costs and get a lower interest rate. But sellers with an assumable loan consider this in their price, and many of the real estate loans since 1970 have clauses that prevent a buyer from assuming a loan. Why does a lender want you to take out a new loan? Right. But many lenders are willing to renegotiate an existing loan for a higher interest rate and perhaps a larger amount. Nearly all loans are VA, FHA, or conventional loans, and most are conventional. With VA loans, the Veterans Administration of the federal government guarantees to pay the lender up to 60% of the loan, not over $25,000, if the borrower fails to pay. How do you qualify for a VA loan? Yes. Veterans of military service must get a certificate from the Veterans Administration. Since the VA guarantees part of the loan and the lender holds a mortgage on the property, Qualified veterans may not need to make a down payment on suitably appraised property. An FHA loan is insured by the Federal Housing Administration. Their requirements vary, but if your income and the house's price qualify, an FHA loan may be the best kind for you. Besides FHA and VA loans, what other kind of home loan is there? Yes. About 3/4 of all mortgages are conventional. Most of them are made by savings and loan firms, which bear all the risk since there is no government guarantee. But when interest and inflation are high, conventional loans may be difficult to arrange. You and your spouse may both have to work, sacrifice, save, and put off vacations, children, and even buying the home. When a real estate sale and mortgage loan is finally complete or closed, you must pay closing costs, which may be $1,000 or more. They include title examination by attorneys, courthouse recording costs, survey and appraisal, mortgage taxes, credit reports, and title insurance. Now you have your house, your home, your castle. Good luck.